Hey, folks, let me know. Please let me know this time if you can hear me out there because sometimes I have the wrong mic going. So I just want to make sure you guys can hear me because today I want to find out from you guys. We know the Federal Reserve is going to cut tomorrow. So, what are we advising our clients? So, hopefully, you're a realtor, maybe a loan officer. Let me know over there. If you're a realtor, give me a house sign. If you're a loan officer, give me a dollar sign. If you're a consumer here, thanks for joining us. So, what we're going to talk about today is what the Fed's going to do tomorrow. We know what they're going to do tomorrow. But how are we guiding our clients? What are we telling them or advising them? Because what I don't want to do is like a lot of the channels, they just come in with doom and gloom every day, but they really don't give you any direction. You know, the housing market's going to crash or this is going to happen. But what I want to do is just give you the tools. Okay, so let's get over this. In 23 hours, the Fed, they're going to cut rates. Give me a thumbs up if you think that's what's going to happen. And here's basically what they look at. Okay, so let's go through these briefly, and I want your comments on this. But I really don't care about those numbers right now. And the reason being is let's get over. I did a survey. And I hope you guys are doing this. If you're realtors or loan officers, do this on your websites or, whatever you have. I have YouTube. That's my platform. So what I did is I went out there and I want to put together my forecast for next year. And I need data from everybody. So if you're a realtor out there, you're a loan officer, provide some data here. This is basically a platform. I don't want anybody, on the sidelines. It's a community to help people. Okay, so I come out each day. I'm helping realtors, loan officers, and hopefully you guys out there, if you're homeowners or looking to buy, how to maneuver the markets right now. So let's get over to this. Here's what we want to provide right now. What do you think mortgage rates are going to do in 2026? So here's a survey that I did. Not a ton of people responded, but 235, good amount of people. And most people are sitting there right now saying, okay, rates are going to be 5.99 or lower, and that's over half the people. But I'm going to go down, show you guys a couple other posts we put in here, and over time we're going to check the accuracy. I'll give you my thoughts on this, and like I always tell you guys, fact check me. Go back to videos I did a year ago or so, and just let me know how I did. Okay, so some things I probably missed, other things, hopefully we got right, but let's keep going through here. So everybody thinks, or the majority of people think, mortgage rates are going to go down to 5.99 or below. I'm kind of in the sphere right now. My thoughts in Q1 are going to be 5.875 to 6.25. I'm going to bring it down a little bit after this Fed meeting, and now as the time progresses, I'll give you my tidbits on that every day. So if you're new to this, subscribe over there so you see my posts every day. Let's get over to here. Here's another piece of the puzzle. Now, here's the intriguing thing. So, folks, I get mortgages all over the country. So I get a kind of a feel for what some areas are doing. Now, I've been saying for the last 2 years, again, check my videos, you're starting to see the corridor like Pittsburgh, Cleveland, things like that, that are doing pretty well. And they actually did well last year. They did well this year. Check all the data, especially CNBC just posted an event that basically, I think I put in yesterday's YouTube. So check out yesterday's YouTube. But here's what people are telling us throughout the country. Only 123 votes here, but this is where I really need you guys to help me because I see the applications all over the country. This time of year, it gets slow. I won't say it doesn't. And a lot of people right now are thinking okay, we know the Federal Reserve is going to cut rates, but should I refinance or things? But here's what people are saying. 48% of the people are saying house prices are going to be flat. 31% saying up and 21% down. That's basically kind of nobody knows. It's going to be flat or a little bit right through there. I don't see anybody, I should have put a comment on here. Do you think the markets are going to crash? If you do, post a comment over there. Here's what I did yesterday in the last 2-3 days. I went to all those crasher video people and I just said, hey, what am I missing here? So would you like to join me in a video collaboration, whatever? I can give you my side of the coin and you can give me your side of the coin and we'll see how it goes. And then we'll also, if you would, let's go and look at our last 2 years, 3 years history. How did you do and how did I do? I haven't gotten any responses on that yet. So I'll keep you up to date on that. I sent about 10 out. I'm not expecting any responses other than some kind of pissed off people, but whatever. Okay, so that's what we're seeing through here. So let's get down through here. Now, here's what we posted. Now, I posted this 2 weeks ago. Do you think the Federal Reserve is going to cut or not? And this is the public, folks. It's 200 votes. And half of the people said yes. Half the people said no, and then a quarter percent of people said they were going to raise rates. So basically, nobody knew at that time. Well, now there's a 90% chance they're going to cut. Okay, so that's what's going on there. Okay, so here's where rates are today. So we get through there. So let's get over to now what our thoughts are. The Fed's going to cut. Now, what are we advising our clients? Please post in what you're telling your clients over there. So right now, I'm telling them to lock in. If you're closing within 30 days, you're buying a house, lock in. Okay, so now if you're watching this, you're probably saying, okay, I'm not locking in now. I'd like to know what, maybe January, February, March is, the spring season, or I'm building a house. And I was just watching, I think it was one of the financial channels, and they're all over mortgages and home prices today. And they're saying, giving us areas that are good and favorable and so forth. So let me know what your areas are looking like. But there's still, the home prices they're saying are still more affordable if you build. So that's I'd like to you guys to give me a thumbs up there or not as well. So here's what I want to help you with. I'm not going to leave it there. Okay, so I want to provide you tools. What's the Federal Reserve going to do? I know what they're going to do. They're going to cut rates. Where are mortgage rates going to go from there? I don't know. I have no problem telling you I don't know. I can give you my thoughts behind why I think they might change and where they're going to go. But I want to give you guys the tools right through here. So I posted most of these today. If you want to use discount code Dan, you'll get these for free. Okay, so we're trying to get these out to everybody out there to help you. Because I'm in this business. I get it. We listed my mom's house for sale on December 1st. I just got a contract that we're signing this afternoon, basically at asking price. And it's this time of year. So my thing is where my mom lives, the market must be pretty darn good because we just didn't give the house away. Okay, so that's what I'm saying. If you're a realtor out there, you're a loan officer, you're a customer looking to, what area are you in right now? Let us know. And we just got somebody giving me a thumbs up. So I hope you guys can hear me okay. Please let me know if you can't. That's the whole point of this. Okay, so here's one calculator I want to provide to you guys. And what this is the max purchase price calculator. And I hate the title of that because what I don't want, I don't want you to max out. Okay, that's not the whole purpose of this. The whole purpose is just give you an idea of kind of what you could afford and what program might work for you. Okay, so here's the tools that we're going to give you. And I'm just going to do, I just launched this. It should be down below in the description. If it's not, just hang tight. We'll be posting this here shortly, but plug in your information. Here's what this does. You plug in and it's pretty simple to fill in. What is your yearly income? Okay, just plug it in. If it varies, look at your W-2 last year or your tax returns, plug in that number. What's your total monthly debt? The minimum debt that you have. So don't put, you might have a car payment you're making double payments on, or you might have a credit card that you're making double payments on. Just put in the minimum payment right through here. Okay, just for these purposes. All right, so this person is saying that they're going to put 3% down. That's all you really need if you're a first-time home buyer in most cases. Today's rate is about 6.25. And if you watch this morning's video, these rates, they could be up to 7% if you're looking at Mutual of Omaha. And check out that video I did this morning. It was pretty neat. So 6.25 is about the rate today. Loan term I'm looking for is a 30-year term. The property taxes, just put in 1% there. If you need help with this is a huge piece of the puzzle. If you're a realtor, if you're a loan officer, even if you're buying a house, go to this website. And I'll try to remember to post it down below. I think it is down below. What are your real estate taxes? Okay, or if you're looking to buy a house, jump into this thing and go through here, and you're going to put in, the zip code, the home price, and everything. It'll tell you exactly what the taxes are. Okay, so here's it's self-explanatory, so you can see that. This is a big piece of the puzzle when you're looking to buy a house. It could be more detrimental than the interest rate. Also, check your homeowners insurance. Homeowners insurance? I just reviewed a study this morning. It's up 70% in the last 5 years, homeowners insurance. And real estate taxes, I showed you in Illinois some counties that just doubled. They doubled their tax rate. It was up 120%, I think, in the last 5 years. So we're getting priced out of our homes. Yeah, with home prices. Rates are, if you look at history, they're basically kind of where we've always been in history. What's majorly making these things unaffordable? The real estate taxes. I mean, it's crazy. And homeowners insurance. So those are the big two pieces. If you're a realtor, you're a loan officer, make sure your clients understand. If you're a consumer out there, when you're looking at that house, make sure you understand that your house payment isn't just that principal and interest, basically your loan payment, it includes things like your homeowner's insurance. Call your homeowners, your car insurance company and get a quote on the house you're looking at. It's going to include your real estate taxes. You might be surprised how little or how much your real estate taxes are based right here. And then if you don't put down 20% and you're not getting a VA loan, you're going to have what's called mortgage insurance. So that's another maybe $100, $200 into that payment. So this is what we want you to understand on this calculator right through here. So again, I know I was coming in saying, we want to figure out what's going on with the Fed tomorrow. Folks, we know it, and especially if you're in the industry right now. But if you're a consumer out there, we're telling you the Fed's cutting tomorrow, but we don't know what's going to go on with rates, because the last 5 times the Fed cut rates, mortgage rates went up, and sometimes they went up considerably. Okay, over the last cut, they really didn't move that much. We were locking in people about 5.99, and then rates went to about 6.25, 6.375. So let's get over the rest of this. You're going to plug in your number here, but go into that tool and you can actually plug in the exact number there. Same thing with your homeowner's insurance. Just put in like 0.25, but call your insurance agent. HOA means if you're buying a condo or maybe a townhouse or something, you might have what's called an association fee. What they do is they'll cut your grass and take out the snow if you're in an area that has snow. We have 1.5 feet here right now. So they do things like that. So then you're going to hit this, see my estimates of my prices. So you might not realize, but all these programs over here have different guidelines. And the biggest guidelines are how much the rates are going to be and how much of a debt ratio you can go and things like that. But this will summarize it and saying, okay, based on the information you put in here, here's the most conservative programs you'd fit into in the price of the house. Okay, so you're going to look at a conventional loan. You go up to $250,000. It's going to be $1,868 a month in your principal and interest, taxes, and insurance, because you put in all that information here. And what this is saying is your debt ratio is at 43%, so you're okay. Then it's going to an FHA. You can qualify a little bit more because they'll allow a higher debt ratio. If you're confused with all this, go to my website. Okay, especially if you're a homeowner right now. We created a tool over there for you guys. If you're a homeowner right now, to plug in your interest rate that you'd like to refinance. See it over there. It's a RateWatch 2.0. So plug in your mortgage information, then let me know what interest rate you'd be interested in refinancing. What we'll do is we'll track you down when that rate hits there. We'll go over the new payments and everything else with you. But let's get back to here. So we're going through here, and these are the programs you fit into. So if you need help, finishing up this, because on a VA loan, if you're eligible for a VA loan, you can go up to $334,000. Now, these are just the conservative approaches on these. Now, if you want to get a little bit more kind of aggressive, especially on debt ratios, where you can really push it out there, you can actually go in here and use more aggressive debt ratio tactics, especially in like FHA and things like that. So let's watch how these numbers move. Click it. And there it goes. Okay, so now with a conventional loan, you can go a little bit higher. You're going to go all the way to 45%. So this is pushing it up to that. So to bring it up to $265,000 loan. Look at FHA, $304,000. VA, you can get much more with a VA loan because the debt ratio can go up much higher, and they don't have what's called mortgage insurance. So that saves you money there. So now let's say, you're a veteran and I'm eligible for some veteran benefits. Well, you can go in here because now you qualify for maybe you have a disability that qualifies you that you don't have to pay all the fees. So this is what the calculators can do for you. So again, if you want to lock or float, you decide there, but this is for home if you're looking to buy a house. Now, we also have a calculator right here for those out there that might be looking to refinance. So let's go back to square one again. Okay, so let's go back to the beginning. We know most likely the Federal Reserve is going to cut rates. Everybody's telling us that over here. So wonder if they don't, or wonder if they do. So I created a calculator for that as well. You go over to here, and what you do is you're going to plug in your current mortgage information. So this person has a $450,000 loan, rate 7.5%. They're at a 360 loan. That's basically the loan term remaining. So this person, let's say they closed in 2023. So they'd have, what is that? They made 12 payments, 24 payments. Let's say they're right about there. Okay. So now the closing cost. Closing costs are one big piece of this puzzle that a lot of people just don't understand. But right for these purposes, put in $3,500. Okay, put in $3,500. That might even be on the high end. Okay, so current rates today are 6.25, and you might be looking for another 30-year term. But But let's hold on a second. Wonder if we're saying, okay, next year we know rates are going to drop, so they'll drop to at least 5.75 because most people that's what they're thinking. So does it make sense for me to refinance now, or what should I do? Well, click this. Here's what it's going to tell you. It's going to say your current payment's this, your new payment would be this, you'd save that much money. Okay, but basically what it's breaking down is saying, well, since you didn't refinance, you paid that higher rate for another year. So you burned all that interest, you burned all that extra money, and you actually lost out on over almost $5,000 in pure savings. So even if rates drop to 5.75 next year, it might not really make sense to hold off now. And if they even drop lower, well, check out your closing costs. If they're minimal, maybe just do it again. So these are the things we can help you for, and that's where the RateWatch thing comes in, because we'll contact you every time this happens. So hopefully you understand that I'm not here trying to tell you exactly what's happening. I'm going to just coach you through all this and make you you decide what you think is best for you and where you think rates are going to go from here. I'm just providing you all the tools to make you successful in this industry, make you help sell more homes, maybe if you're a realtor or if you're a homeowner or potential buyer, maybe helping understand the markets a little bit more. So let's go to any questions that you guys might have, but let's just go over to here for now because this is the countdown what the Federal Reserve is going to do. So let's get over to any questions you guys might have. Thanks for participating today. I greatly appreciate it. We can hear you. Thank you so much, Habib. The next one, what do we got? What is a good tool to understand the true value of my home when looking to know if I'm able to remove PMI? You know what I would do? I just just Google your address and just go to 3 or 4 of the things. You're going to get Redfin, you're going to get Zillow, you're going to get the other ones, and just blend it together. There's no one that is, okay, that's the end all beat all, because every market's a little bit different. I pull up my house and it even has my square footage wrong, but at least it gives me an idea of where my home prices are going. But check that out. And if you've been in your house for a year or two, and you have mortgage insurance on your home, call your mortgage company and just ask them, hey, am I in a position where I can remove my mortgage insurance? And be a little bit adamant about it, because my son just had his removed. I think it was $85. He called them and he said, whatever, they did an online evaluation and I think it was 48 hours or 72 hours, they got back to him and said, yeah, you're eligible for the removal. And I think it saved him like $180 a month. So fantastic. That's what I would highly suggest you do. Even if the value comes back and it really didn't move at all, it just put it on the burden of the lender to see, have them maybe prove that value or try it out. You probably don't have anything to lose. Okay, so the next question we have, building a new home, hopefully done in May. When is a good time to shop for a VA loan? Builder preferred lender is offering 1% down or closing cost credits. Fantastic. So here's what I do every day. I love VA loans. Give us a shot. I would go to the lender. You probably can't beat the builder's lender, but make them honest. So what I did is I actually did a testimonial. It came out a little bit ago, but we're launching it again, of a young man who actually bought a home. I think it might have been a VA loan, and how we basically used his lender credits he didn't have to make a mortgage payment for like 6 months. It was crazy. So check out your lender's information. But here's the things you work on. Make sure you can get the highest credit score you can by time that, you're going to lock in probably March, April. Okay. And by that time, you're probably going to see a little bit lower rates. Okay. So, and here's why. Here's my expectation. So let me get on to my forecast. So thanks Everyday for rolling us into this. But most likely you're going to go with your preferred lender. But when you get that quote from them, send it to me. My information's all down below. What I'll do is I'll do a video and I'll break it down, show you, okay, here's what they're getting you and here's what I can get you. Most likely we won't beat them, but at least keep them honest. Okay. So let's get to what my thoughts are. So let's go back to this and I'll explain it to you, because we're going to have the fortunately or unfortunately, we got a lot of times it's the same question. What do I do? Okay. So let me walk you through how to get prepared to get the best rate in town. And then how do you really maneuver through that? Here's what the lenders are looking at. They're going to look at your credit score. Huge. Okay. It's huge. So make sure you're using the right credit score system. Many times when people reach out to us, they're like, okay, I use my Discover thing and it's an 800. And then we pull the credit scores into 680. It's like, okay, you need to get your FICO credit scores. I know you heard a bunch of things about Vantage and all this other stuff. But here, hold on. But sorry, we are live. But right now, it's still the FICO credit scores. So I have a website up through here. I'll try to pull it up if I can while we're sitting here. It's called creditscoresandmore.com. Okay, so I created this years ago. And the reason why is because at the time, everybody was telling you, okay, pay off those collections accounts and do this and do that. I'm like, everything you're telling them is wrong. So I created this thing. So one of the coolest things is right through here. You can get free credit scores. This is Credit Karma or Credit Sesame. I don't know which one it is. Sign up for it. Don't sign up for any of the other, advanced features of this. It's not worth it. It's a pretty cool system. This actually almost saved me this weekend when I was out of town. I got an alert from them saying, "Hey, did you make a purchase, such and such?" And I'm like, "Nope." Call my wife real quick, and she's like, "Yeah, it was me." So this thing kind of saved my butt a little bit. But here's where you can really dive into this. Go and get what is your real credit score? The one that mortgage lenders use, auto dealers use, credit cards use, and you can find it right through here. So that's the website I created long ago, and it's a plural, creditscoresandmore.com. So your credit score is a big piece of this. The house value, what we call loan to value. Okay, it's the loan amount divided by the value of the home. Okay, so the lower the number, the better. Okay, so the banks want you to have a bunch of equity in your home, and that makes it less risky on the bank. So you're going to get a better rate. So again, if you have a $500,000 house and you owe $500,000, you're at 100% loan to value. If you owe $250,000 on it, you're on a 50% loan to value. That's 250 divided by 500. So your credit scores, what we call the loan to value, and then you got to make sure you fit on your debt ratio. So make sure, go over when you're pulling your credit and doing those things, use these tools. And this is where we go over it with you right through here. Like this is the max mortgage calculator. So you're putting in your income here. This is where the one I was saying, use the data from your credit report. Don't use the data that you actually pay. Also a little bit trick here. If you're a student or you have student loans, hopefully you guys know this, especially if you're a loan officer, but realtors, you guys might not know this. If you're a consumer out there, you're something looking to buy a house and you have student loan debt and you're like, I'm not making any payments. I'm in school and it's deferred. It doesn't matter. As long as you have student loan debt, we have to use a certain percentage of that as debt. So that's where you might get some of this data wrong. That's why we reach out, all along the sides at saying, schedule an appointment with us. And that's where you can also go to our website for that. And that's the rateupdate.com. Okay. So when you're through here, you're going to go here and click it. And again, this is where all the data is coming in, but this is where the more accurate you are, well, then the more accurate this data is going to be over through here. Okay, so expectations. Let's go back to lock or float. I'm thinking, and I'll be posting this probably within the next week and a half, my forecast for home values and interest rates. But here's what I'm thinking. Well, let's recast what I was thinking last year. Okay, so last year, here's what I said. I said by Q4 of this year, the housing market will be nationally flat as a pancake, and we'll see rates probably about 5.99 to 6.375. Well, I was wrong. Well, nationally, mortgage home values went up almost 2%. That's why I was wrong. I thought they'd be flat as a pancake. So some of the negative ones like Austin and Cape Coral or things like that in Florida are being well offset by Pittsburgh and areas like that. So when you look at it nationally, some areas are not great and some areas are doing pretty darn good. And I can vouch for the Pittsburgh area where my mom's house is. So your home area is really important, but here's what I'm looking at. The inflation numbers. We're going to have tariffs that probably are going to be deemed illegal, but the Trump administration is going to already have a plan B worked out. So that'll help our national debt, believe it or not, even though people are saying it's inflationary. Let's go to inflation. We know tariffs are inflationary. We had inflation about 2.3, 2.2 is teetering right at that 2% mark that the Fed needed, and then tariffs hit. And then the inflation rate, I thought it was going to go up about 4 basis points from there. It's about 2.6, 2.7. Actually, we just hit 2.8. But it didn't go way high like a lot of people thought. And it's actually starting to stabilize now. And there was a Fed notes yesterday saying their expectations of the next 2 or 3 years are basically equal to where we are now. So they're saying there's no additional inflation coming in. We're having a tough time bringing it down, so that we're not going to get an inflation shock. Now, attrition, I think, is starting to take care of a lot of the employment numbers and the immigration thing. And I'm not even going there because I don't want to go there. So that's what we're seeing on the jobs reports. So not a terrible jobs market, not a great jobs market, but we're not falling off a cliff there. Inflation's not skyrocketing. And then home values, where are they going to go? Now, here's my thought on this, and this is why I brought up a lot of these tools today. Please, when you're out there, be careful if you're looking to buy a house. Make sure when you reach out to hopefully us for your consultations, and we'll go back to that. If you're looking to buy or build a house, schedule a consultation with us or give us a call. We don't really want you to put in your application. We want to know a little bit about you. You probably want to know a little bit about us. But I'm looking, let's go down the road. Schedule a consultation to make sure your budget's in line. You can fit the program you're looking for. Your credit score, it's the credit score you think it is. And then making sure we can get you qualified for that program. Do you need a little bit more money down, a little less money? We can walk you through that. Interest rates, I don't really think they're going to be much different. I'm expecting, or I'm modifying my Q1 interest rate forecast for 2026 to 5.875 to 6.25. So again, let's recast what I was saying last time about last year. I guess I hit it. Then I hit it on rates and I hit it on home prices. And if you go back 2 years, I kind of said the same thing. I was a little off. I was about a quarter to half off on rates, but I nailed the housing market values and rates from there. So that's what we've seen throughout there. So now here's my expectations. All those. Inflation's not going to be bad. The jobs market. Now, I'm not saying things are great. I'm just saying things aren't going to really push for mortgage rates to come plummeting down. So we're going to be stagnant in rates, and we're going to be stagnant on home values. So while you're out there deciding, maybe you're still paying rent or whatever, check out a lot of these tools that we have. We have budgeting tools for you and a whole bunch of other things to help navigate you through this market if you're a homeowner or maybe a home buyer. So let's see, is there any other questions that we might be able to get to? Let's see. Everyday, please reach out to us, buddy. I'd love to help you. Everyday, credit score is 830. And again, let me know, where'd you get that credit score? Okay, you can let me know on here if you want, or you don't have to. Let's see what we got. I've tried calling and never get an answer. And that is virtually, I hope you're dialing the right number, because some people modify one of the numbers and miss it. But the numbers down there should be good. And if it doesn't go through, I get a message. But if you would, Jason, just email me. Here's my email. I'll try to post it in here. Basically, it's Dan here. I think it's in the captions up through here. I can post. There it is. So Jason, I apologize about that. But if you would, just shoot me an email and I'll personally give you a call here shortly. I do have a few things to take care of, but we're more than happy to make sure you're taken care of. So my apologies on that. And then that looks like Everyday. Oh, Everyday did post again. Let's see what you got, my man. From Preferred Builder. I don't know what you got there. So if you could reach out to me, I'd appreciate it. All righty, folks. So these are the calculators that we have for you today. My locker float. If you haven't subscribed, please subscribe down over there. These are the tools that we want to provide you to help you navigate through this process. So if you're a homeowner, you're a home buyer, love to work with you, especially if you're a realtor. If you're a realtor out there, we'd love to work with you as well. You're a loan officer out there. Hopefully you can join us as well on these and subscribe down over there. So hopefully you can learn some things and use these calculators to help more and more clients out there with home ownership. I still think that's the American dream, and it is a wealth builder. So that's it for today. If you guys have no more questions, I will be done for the day. I'll be posting my closing bell. Nothing exciting today, but tomorrow is Fed Day. So join me at Fed Day right after. Why we do it in half hour after the Fed announces, that's when all the movements start. So what will happen tomorrow is the Federal Reserve will come in. They'll say, okay, we cut rates by 0.25%. They'll read all this mumbo jumbo, and then they'll be in front of the media answering a ton of questions. And that's when you'll really see the markets really moving. It's kind of cool. So subscribe down over there so don't miss it, or I will be posting it so you can see that all over social media. So thanks again for watching, taking your afternoon to spend a little bit of time with me. If you're watching this as a recording, have some questions, please. A lot of times I don't view down there. Reach out to us. Go to our website. You can ask Dan right up through here with this tab. So use that if you're watching this after hours. Otherwise, give us a call at 844-775-5626. And my goal each day is, doggone it, where'd it go? My name is Dan Frio. I'm the host of the Rate Update. I'm a licensed loan officer in all 50 states as well as Puerto Rico, folks. I've been doing this for over 35 years, and my whole goal each day when I come out here is to help explain to you guys what in the heck's going on with those and the whys behind it. So God bless, folks. Have a fantastic afternoon. I'll see you here at the closing bell, and I'll see you here tomorrow live after the Federal Reserve tells us they're cutting rates. See you then, folks. Have a good